Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and today's contract tip has to do with the old buyer loan switcheroo. So what am I talking about? Well, I am talking about what happens when a buyer and seller are binding using the Georgia Association of Realtors, or GAR, contract package. They are binding with a buyer subject to financing buyer, subject to a conventional loan contingency, and then the buyer switches to an FHA loan, a VA loan, or a USDA loan. What happens? So let me tell you a little bit about what the GAR contract says, and stay tuned to the end because I have some surprising information. Maybe surprising, hopefully not if you think it through, but I'm going to explain it to you so it won't be surprising from now on about what happens should the appraisal come in low in this switcheroo. So basically, in the Georgia Association of Realtors contract package, in the conventional loan contingency exhibit, which is GAR form F404, it has a place where it says conventional loan contingency, and it says the buyer shall in good faith seek to obtain a conventional loan described below, and you describe the percent of the loan, down payment, number of years, interest rate, so forth and so on, fixed adjustable. Then it goes on. This is not a video on the entire financing exhibit. I just want to talk about the switcheroo. So it does go on to say that a buyer may apply for a different loan. However, if a buyer is going to terminate and protect their earnest money, the loan denial letter must be a denial letter for the loan described in this contingency. And before I go on further, please note, check out the other video I have done on why a financing contingency exhibit has nothing to do with loan approval. What? Dana, what are you talking about? Watch that video and that will explain more what I am talking about regarding the exhibit. Has nothing to do with loan approval. It's all for protection for a buyer. Should a buyer not be able to convince a lender to take the risk on them to lend them the money to purchase this house. However, so it does go on to say buyer may apply for a different loan. However, when we're talking about FHA or a VA or a USDA insured loan, all bets are off. It's a little bit different. I am going to continue on and explain what I'm talking about. And again, stay tuned for that surprise information regarding what happens if the buyer does the switcheroo from conventional to a government-insured loan, and what happens if the appraisal comes in low. I had previously recorded that information as part of another video and realized this needs to be its own separate video. So hang on, and here comes the rest. Now, the reason I bring up the FHA and VA loan contingency is there's one other thing. I did say that a buyer can go try to get whatever they in good faith initially start with trying to get this loan as described in this exhibit. And right now we're talking about a conventional loan contingency exhibit. And I already read to you, it does say that the buyer may seek another loan. However, there is a caveat to that in the Georgia Association of Realtors conventional loan contingency exhibit. It says a buyer may apply for a different loan. However, the buyer shall, it says the buyer has the right to apply for a different conventional loan than that one that is described in the exhibit. Buyer shall not have the right to apply for an FHA, VA, or USDA loan unless the parties agree to amend this agreement, meaning amend the purchase and sale agreement, add the FHA, VA, or USDA loan contingency exhibit. And if they do that, then basically this conventional loan contingency exhibit is no longer part of the agreement. And there is nothing that requires a seller to agree to amend this agreement. So, buyer's agents, once a buyer goes binding with the seller on a conventional loan, they do not have the contractual right to apply for an FHA or VA or USA, one of the government-insured loans. Why? They do have the right to apply for a different conventional loan, but not one of those government-insured loans. Why? Why would that be the case? Well, the reason is in the government-insured loans, unlike a conventional loan, there are certain fees and issues that the seller is required to do that a seller is not required to do if a buyer is getting a conventional loan. For example, the seller on an FHA and VA insured loan, the seller is required to pay certain lender fees, tax service fees, and some other fees. And on a VA insured loan, not only that, the seller is also required to get a termite clearance letter, and then there's all sorts of information and requirements on not only that termite clearance letter, but if there's any previous damage to the house, even if there's no current active infestation, if there's previous damage to the house based on termites, there are some seller obligations under the GAR VA contingency exhibit. And just for your reference, the VA loan contingency exhibit in the Georgia Association of Realtors contract package is F410. And the FHA loan exhibit is F407. Not only that, if a buyer is getting an FHA or VA insured loan, that appraisal value stays with the property for a certain number of months, stays attached to the property. Conventional loan, an appraisal value does not automatically stay with the property. So one thing to think about, let's say a buyer and a seller are under contract with a conventional loan exhibit. And it turns out the buyer says, hey, guess what? I am going to go get a VA loan, an FHA loan. And they don't go through the contractual process. They do not get the seller's written permission on an amendment. They do not do what they said they were going to do and what they contractually agreed to on the conventional loan exhibit. But they do it anyway. And financing-wise, it's not a problem. They're able to get the financing. However, what happens if the appraisal comes in low? Well, on a conventional loan exhibit, if the appraisal comes in low, the buyer, if it's a conventional appraisal, the buyer must give the seller the opportunity to sell it for the appraised price, or the buyer has the option to come up with cash, or they can choose to terminate. On an FHA or VA insured loan, I've done several videos on this, if an appraisal comes in lower than contract price, the buyer has the right to terminate, send notice of termination through day of closing, and will get their earnest money back. However, that is only if the contract is subject to the buyer getting an FHA or VA loan. So the point I'm making here is you buyer's agents and you listing agents, pay attention to this, and you brokers that might have to decide earnest money disputes, pay attention to this. If the contract is subject to conventional financing, the buyer ends up switching to an FHA or VA insured loan. Appraisal comes in low. Buyer sends termination notice to terminate, requesting the earnest money, saying that the appraisal came in low, the FHA or VA appraisal came in low, and based on government regulations, they're entitled to their earnest money back. In this situation, that is not the case because the contract was not subject to FHA or VA financing. The seller didn't agree to that. The seller agreed to the buyer pursuing a conventional loan. So if the buyer does the switcheroo without amending the contract and the appraisal comes in low, the buyer does not, in that situation, have automatic termination rights. That's really, really key to think about. So if you are a broker and you have to do a 10-day letter deciding who gets the earnest money, don't just automatically think, oh, FHA, VA insured loan, buyer's earnest money is protected on low appraisal. You have to go back and research the documentation, look at the contract, see what type of financing contingency the buyer and seller agreed to, and see if that was ever amended. If you like that video, check out the one here. If you like the content on this entire channel, please click here to subscribe. I try to take even the most complicated of real estate situations and make them crystal clear. See what I did there? Real estate made crystal clear. Thank you guys so much for watching.